afternoon. I'm Dane Stengler, Director of Strategic Initiatives at the Bipartisan Policy Center. Apologies for our delay. We're experiencing some technical difficulties, but I assume that in our virtual world, we've all had some experience with that in recent months. We have a great panel discussion today. Our event is entitled After PPP, How Should Small Business Lending Programs Be Reformed? We're going to start with Congressman French Hill, co-chair and co-founder of the House Entrepreneurship Caucus, and BPC Vice President Michelle Nellenbach had the opportunity to interview Representative Hill about this topic and other small business and entrepreneurship issues.
Hello, and thank you for joining us for our event, After PPP, How Should Small Business Lending Programs Be Reformed? I am honored to be joined today by Representative French Hill, a ninth-generation Arkansan. Representative Hill is the 22nd member of Congress to represent the Central Arkansas in the U.S. House of Representatives. He is a member of the U.S. House Committee on Financial Services, where he serves as the ranking member of the Subcommittee on National Security, International Development, and Monetary Policy. Prior to his congressional service, Representative Hill was actively engaged in the Arkansas business community for 2 decades as a commercial banker and investment manager. He was the founder, chairman, and chief executive officer of Delta Trust and Banking Corp., which was headquartered in Little Rock and recently merged with Arkansas-based Simmons First National Corp. Importantly, for our purposes today, he helped to found the Bipartisan House Entrepreneurship Caucus. He tweets at Rep French Hill, and you can follow BPC at BPC_bipartisan. Congressman, thank you so much for joining us today.
It's great to be with you. Thanks for the invitation.
Sure. So let's just dive right in. So today, our event is focused on access to capital, especially reforms that might be made to the small business lending policies. But before we talk about that specifically, I want to start with a slightly broader frame for you. We're talking in late May 2021. The COVID-19 hit the country about 14 months ago. Tell us about what you've seen during that time in terms of the impact on small businesses and entrepreneurs in your home district in Arkansas.
Well, Arkansas is blessed in that the state never fully shut down. We had over 80% of our kids in in-classroom instruction. That really helped the job market because it allows moms and dads, obviously, to attend to their work while their kids are receiving school. So I would say that's a fundamental point. And then secondly, I think the state did pretty well business-wise. Our state finished with a pre-CARES Act, pre-pandemic assistance surplus of almost $700 million. So the economy here is strong, but that doesn't take anything away from all those entertainment, restaurant, meeting venue, or training employees that suffered job layoffs or job eliminations during the pandemic. And the Paycheck Protection Program and the EIDL loan programs and the other assistance I think that Congress passed on a bipartisan basis during 2020 were, of course, were essential and allowed Arkansas small businesses particularly to hang in there during the pandemic as the state reopened.
That's great. I will say your former governor, Mike Beebe, has been a part of BPC, and I've always been impressed with the state as I learn more about it through him. So I wanted to talk to you about the Bipartisan House Entrepreneurship Caucus. The caucus was initially launched before the pandemic. Then you and others relaunched it earlier this year in the new Congress. Talk to us about the motivations behind the caucus.
Well, I've been an entrepreneur since I got out of college back in 1979. I've helped start a lot of businesses, finance a lot of businesses, and led businesses. So I'm a real believer in each community's venture ecosystem. Steve Case's book, Rise of the Rest, I think speaks to all of America that's between the coasts, which means you can have a vigorous, successful venture ecosystem no matter where you are in this country. And I'd say in the last 20 years, that's been a big part of focus in local communities, chambers of commerce, the Kauffman Foundation, angel investor groups, and mentorship groups all across the country. It's very encouraging to me because when I got out of college, I don't think the venture ecosystem in Little Rock, Arkansas was particularly good. If you didn't have a family business or couldn't work for a big company or go to a training program or were a lawyer or CPA, you didn't really have a lot of encouragement, and I think that's changing. So the House Entrepreneurship Caucus wants to really enhance that. We've done a couple of things. First, we make sure we have members from small business, from House Ways and Means, House Financial Services, and members from both sides of the aisle that have a business startup background or have built a successful business, so that we can have their counsel and advice on federal policy. We introduced a bill this spring that looks at pre-pandemic America on why startups have fallen off. You know, we see so many stories about unicorns when we read the business press, about technology companies that are huge and they grow from nothing and they go public with huge market caps. But even pre-pandemic, we'd seen a fall off in that venture capital startup community across the country. So our bill asked the Department of Commerce to assess that. And then I've encouraged all of our members in the Entrepreneurship Caucus to do what I call venture ecosystem events in their districts. Bring your angel investors, bring your startup entrepreneurs, bring your accelerator teams, bring the Kauffman Foundation, bring your local innovation hub to the table and talk about state and federal policy and how we can enhance startups.
Wow, that's really particularly important work. I love the idea of having those sessions back home as a way of promoting small businesses and entrepreneurship, because we know they actually are the source of a significant number of jobs. And obviously with post-COVID, we've got to get people back to work. So how does your own experience as an entrepreneur and business owner, you touched on this a little bit, but shape your approach to the caucus and its role?
Well, I really approach it very practically. I mean, when you have that business mission, all entrepreneurs go into it full feet. I mean, you think about really nothing else. You think about obligations to family, obviously, and everything you're going on, but most people are fully committed to trying to make their business idea a success. Whether it's a startup genetic technology at a medical school research lab, or you want to go from one location of your restaurant that you put all your faith in to a second location. Both are important. And I think sometimes in our country, federal policy is too big picture, Michelle. In other words, we're too focused on that R&D person, that SBIR grant, meaning that innovation grant, someone who's doing collaborative research at a university that's going to commercialize it. So we're very focused on cutting edge technology. And that is important. And I think government spends billions and billions of dollars on that every year, both in the tax code and directly through innovative grants. But we want to make sure that everybody has those tools. And so it's important to be local. Local zoning, local licensing, local taxes, company formation ease, forming an LLC, getting legal advice, getting mentorship. So many businesses fail because they don't have their personal behind the scenes board of advisors or board of directors or mentors. And so that's an important part of it as well. So that's why I'm so focused on these local venture ecosystems. And I think members of Congress are tremendous catalysts. That's one of the great opportunities you have when you serve on Capitol Hill and serve the people there, is you have convening authority. And so bringing people together in a local community about how to create a more vigorous startup community is important, but federal policy is important as well. Raising taxes on capital gains, raising taxes on work, raising taxes on investing, increasing regulatory burden on disclosures, both for the tax code and over at the SEC, can deter companies from going public, forcing them to wait a long time to go public and remain private, which does a couple of things. It deprives all of America that chance to invest and grow with the business along the way sooner, which is where a lot of those investment gains are made. So I think it's both a federal and a local policy issue that our members need to help with our business community and bring focus to that.
So that was, I'm glad you mentioned the SEC. We have, BPC has a corporate governance project that's focused on the ESG ratings, and so much of that conversation focuses on the big multinational corporations, and you kind of brought it back to the small businesses who are just trying to elevate and make it out to the market, and how some of those rulings can affect them. So I'm glad you mentioned that. So Congress demonstrated a good deal of support for small businesses and entrepreneurships through the SBA's Paycheck Protection Program and the Economic Injury Disaster Loans. We know just how critical those were for sustaining and livelihoods. What lessons are you taking away from those programs and how they functioned during the pandemic?
Well, first, let's talk about Paycheck Protection, PPP. I was a community banker before I came to Congress. And so my hat's off to the bipartisan leadership in passing CARES and former Secretary Mnuchin in crafting this concept, which was, look, our healthcare professionals are telling us in March here, this is temporary. It might last 90 days, it might last a year. We don't really know, but we know it's temporary. And that we are going to cause people not to assemble, and we're going to really hurt a bunch of businesses in that arena. So instead of them filing for unemployment, why don't we try to keep them connected to their job? So it was an amazing stand-up of the Paycheck Protection Program. Stunning, really. And in 10 days, produced an interim rule, produced some rudimentary training capability for 5,000 commercial banks, credit unions, and fintech lenders, and created a simple application centered around protecting pay for workers for 8 weeks. So I thought that was amazing. And the money went out the door within that, within 3 weeks. And now looking back, Michelle, we have invested more than we spend in a year on national defense in paycheck protection loans. It's over $700 billion. So lesson one was government on a bipartisan basis in emergency can step up and do something new and innovative that was very responsive to the unique crisis. Not yesterday's crisis, not the Great Recession, but this problem. So that's lesson one. Lesson two is that, of course, we stood it up quickly and mistakes were made, and people got paycheck protection money that shouldn't have gotten it. But the House and Senate were very generous. They put the pandemic and shutting down American business ahead of their terrific concern about, well, could somebody get one of these loans that didn't really need it? We could have made it tighter. I argued, for example, that people needed to show more harm, and the Senate rejected that, and you really didn't have to show any harm, to be blunt, to get that first paycheck protection loan. So I think we should show harm. And subsequently, the tweaks we've made to the Paycheck Protection Program continue to, show serious harm and decline in business performance. But I don't want to take anything away from the jobs that were saved because of it. But I don't think that's a program that we should, continue. I believe it served its purpose. I think its purpose is now complete. EIDL. The emergency EIDL loans. Now, these were, of course, more of a FEMA type product at SBA, given a localized crisis. A hurricane hits. Your business was damaged. You're waiting for an insurance settlement. You're waiting for some other SBA help potentially, your own help, your own savings, accessing that money. So EIDL was, we'll give you up to $10,000 just by filing. Completing your paperwork, we'll give you an SBA number, and then you'll hear from us, and we at SBA will underwrite you and send you some additional funding based on our estimate of your damage from that hurricane or that tornado. This program did not work well during the pandemic. Congress plussed it up, to use a technical term, added money to it back during the CARES Act. We tried to make it more flexible. We tweaked it. But it's not really geared to this at all. First of all, it's a black box. People applied and they didn't hear anything for weeks, sometimes months. And their thought that they would get $10,000 and then up to $150,000 didn't come to pass. So it didn't allow a lot of our small businesses to plan appropriately. Here's how much money I have to come up with out of my savings account or my 401k. Here's what I have to ask my friends and family for. And here's what I'm expecting from the SBA. And then afterwards, I'll borrow from a bank. So it's not a very good tool. So I think we ought to reform the whole 7A lending process and take a look at it in the context of these sorts of emergencies and design how we might have a more national approach to that. And I'm not so sure we shouldn't continue to look at maybe the banks engaging there in that sort of idle emergency credit and not have the SBA try to underwrite that in their own offices, either through contractors or through AI or through any other means. And we ought to maybe look at it as a conduit program as well and let the banks execute that quickly for their customers because they know their customers. And if they're given the rules, I think they can be much more responsive than sending it into the black hole. Final comment. I don't take anything away from the unbelievable. You think the banks and the entrepreneurs were working 7 days a week, 24 hours a day from the third week of March till the end of May, trying to save their business, try to get financing. Those SBA folks did too. And my hat's off to the SBA state directors who took the calls, went to the office, handled the problems, sped money like they could. So look, everybody pulled together last year and I was proud of the effort.
Oh, yeah, I think at every level of government, private and public, people really did try to help those who were really struggling. But as you point out, there were some issues and I think some important lessons learned that maybe the Caucus or your work through the financial services, you can look at reforming some of those programs. You mentioned the banks, and so I want to talk a little bit more about that. So obviously your history was in banking. Talk to us a little bit more about the nexus between financial services and entrepreneurship. Can you give us a sense of how you and your colleagues are approaching that relationship?
Yeah, well, the fundamental to entrepreneurship, again, whether you're writing an app that you hope gets picked up and makes you a global success, or you're doing something innovative in the cloud, in business-related software. So whether it's C2C, B2B, B2C, or analog, you're opening a new business, you're opening a stationery store, you're opening a restaurant, you're opening an automotive repair business. It makes no difference to me. All those things require a plan, they require leadership, and they require capital. They require financing. And what's so exciting, as I said, I won't repeat my comments about the venture ecosystem and angel investing, but the Jobs Act made it easier to be a smaller company and raise money privately through crowdfunding. I have a bill called the Accredited Investor Act, which changes the rules, the SEC rules on private Reg D fundraising that allows people who know the industry to be an accredited investor. Right now, you have to have a large net worth, have a large income to be an accredited investor. And that's the way it's been since the 1980s. And we really haven't modified it much since the 1980s. And when I was in the investment business and banking business, we raised a lot of money through Reg D for startup businesses. And a lot of investors said, well, I am a doctor. I want to invest in this technology because I use it and I understand it. But they didn't meet the net worth test or the income test at the moment of the offering. And so this idea of letting professional expertise qualify you, I think will help people. Also, how do we reform the crowdfunding rules and make it a little easier for people to contribute money and have less regulatory burden while protecting them, obviously, from fraud, which all the SEC rules do. So I think that's an important thing. That is how the financial system attaches to entrepreneurship. And then there's nothing more important than that accountant and that banker, lender, advisor to that entrepreneur. That is a team that is inseparable about avoiding mistakes, planning ahead, and building a successful business, no matter how small or large the ambitions of the entrepreneur.
Well, Congressman, thank you so much for joining us today. I certainly learned quite a bit. I really appreciate you taking the time with us. I know there's a lot going on up there. And again, you can reach the congressman through Twitter at Rep. French Hill. And thank you so much. And I now want to thank our audience and turn us over to my colleague, Dane Stengler, who will take us through the next panel.
Thanks, Michelle.
Thank you.
Well, thanks, Michelle. And thank you, Congressman Hill, for your time and for your thoughts and insight. I now have the pleasure of introducing a stellar lineup for today's discussion. As a reminder, our co-partner in today's event is PayPal. We are fortunate to have Doug Bland, Senior Vice President and General Manager of Global Credit from PayPal, joining us. We have Shafika Daria, Senior Government Relations Associate with the JP Morgan Chase Policy Center. Janice Jucker, owner and president of Three Brothers Bakery in Houston, and also co-chair of the Goldman Sachs 10,000 Small Businesses Voices National Leadership Council. And finally, we have Scott Stewart, CEO of the Innovative Lending Platform Association. Thank you all for joining us. We're going to jump right in. Doug, I'm going to start with you. Since you are here representing PayPal, our co-partner. I want to go around the screen as well. I'll just do a quick fire kind of temperature check of everyone. After the last recession, 2008, 2009, commercial bank lending to small businesses fell sharply, and it didn't recover for several years. Obviously, the crisis, the economic crisis and public health crisis we've experienced over the past year is different in character, different in nature, but we know, as we heard Congressman Hill talk about, as you know, that small businesses and entrepreneurs have suffered quite acutely. There are worries now that even as we transition to recovery, we might see a surge in bankruptcies. You know, once we're past this period of government assistance and lending forbearance, some people are predicting kind of a surge in bankruptcies among small businesses. So I just want to go around, starting with you, Doug. 60 seconds or less. Today, as we stand today, how are you seeing the capital landscape for small and young businesses?
Yeah, well, thank you, Dane. I appreciate the opportunity to be here and such an important topic in terms of access to capital for small businesses, which is a really somewhat of a complicated and fragmented topic depending on the industry, the size of business. Small businesses can be defined in so many different ways, but I think by and large, access to capital, as you mentioned, when we came out of the financial crisis of 2008, has continued to be a challenge, which is why starting in 2015, PayPal made a decision to get in and try to help facilitate working capital to small businesses. We provide payments services to over 29 million small businesses around the world. And what we were finding and talking to our customers was this pain point of getting access to capital. And so in 2015, in a partnership with WebBank, we started a lending program where we're helping businesses who couldn't get access through traditional means. And there are many different reasons for that. Hopefully we can touch upon some of those reasons. But I think, listening to Representative Hill, talk about the importance of public and private partnerships, the PPP was a great example of how if the public and private come together, good things can happen for small businesses, but we have to do more. And especially as we're coming out of this pandemic, I think we absolutely have to spend a significant amount of time thinking through and developing strategies to help these small businesses.
Thanks, Doug. And I'm glad you mentioned, just the sheer variety of small businesses, of young companies, of entrepreneurs. It's a really important consideration as we talk about both public and private mechanisms of support. We're fortunate enough to have a small business owner with us, Janice Jucker, Three Brothers Bakery, as we can see behind you. From where you sit, Janice, just give us your sense. What is your view of the capital and finance landscape today for small businesses like yourself?
So I just want everyone to understand I wear two hats because my husband and I call ourselves the king and queen of disasters. We've been through 4 floods, fire, hurricane, pandemic, and now freeze. So I'm very well versed on disasters. But then I'm also, as being a part of the Goldman Sachs 10,000 Small Business Voices, I hear everything that's going on with my co-small business owners. I personally, for those that are healthy, the small businesses that are healthy, it's great. The SBA is putting more money in the 504 and 7A loan programs, and they'll be able to take advantage of that. But for those who have been through disasters, it can be 3 to 4 years before you can actually access capital, because most of us are S Corp pass-through, and so we have losses on our tax returns, and you need 2 good tax returns in order to access the capital. And then for those who actually had loans, a lot of places gave you deferments. The deferments accrue interest, so it just digs a deeper hole. So I wish I could be very cheery, but that's kind of how I see it.
Thanks, Jan. So that's a good reminder that there is, for many small businesses and many of their communities and employees, there can be a long tail to these crises, and things we may not perceive today could show up tomorrow or in a month or a year from now. Shafika, JP Morgan Chase Policy Center, obviously the bank itself does a lot for small businesses and entrepreneurs, but you're looking at this from a policy perspective. So give us your sense of how you see the landscape today in terms of small business capital and finance.
Yeah, so first off, I'm really excited to be here with you all, and thanks for having me. Small businesses are job creators for the community and for themselves, and they employ nearly half of our workforce. They supply many of our larger businesses, and so we all have a stake in their success. Over the course of this pandemic, we've seen significant declines in revenue, sales, and we've seen a number of temporary closures as well. And so I think many of the small businesses have had moments where they've been less than optimistic about their ability to keep their doors open. And so I think something we're seeing right now is that policymakers and lenders alike are asking more questions. They're listening, and they're even more aware of the needs of small businesses. And so something that I've taken away from this is that different businesses need different types of capital, and entrepreneurs need different ways of accessing that capital. And so we're seeing government stand up or go back to a past program, SSBCI, the State Small Business Credit Initiative. But we also saw the SBA move really quickly and put together PPP, which from our perspective, as a financial institution, we really had to work very quickly to stand up the operation. And so the good part of that is that it really stretched our minds to think about what is the world of possibilities that we have with small business lending. And so for JP Morgan Chase, as a top PPP lender, we issued over 400,000 PPP loans, which amounted to about $40 billion. And I think what's been clear from all of this uncertainty is that business owners need options, and that's what we need to make available.
Thanks, Shafika. You've already anticipated one of the questions I want to come to next. But first, I want to go to Scott. Give Scott a chance to just give us your sense of today, where do you see the landscape of small business finance and capital?
Sure. Thank you, Dane. We actually see green shoots in the economy for the first time in the small business economy. It's interesting to note that if you look at the financial crisis, that was a disaster for big financial institutions. This was truly a small business recession. And so the credit box is currently very, very tight. And so it's difficult to get credit and capital into the hands of small businesses, even as they are thriving. But that's improving day by day.
Well, good. I'm glad to hear you're optimistic, Scott. I want to go around again with another question. I'm going to go around in reverse order, so Scott will be coming right back to you. But we already heard Shafika kind of anticipate this. Most of you have mentioned PPP, EIDL, the emergency assistance programs. We heard Congressman Hill talk about the sheer scale of these programs. This is obviously something different from the last time around, 12 years ago after the Great Recession. What are your takeaways from those programs, from the operation of those programs, from their successes, from their shortcomings? What do you hope policymakers take away from PPP and EIDL? Scott, starting with you.
Sure. I think we need to take a step back and take a look at the achievement of the program is just astonishing. You look at 2019, the SBA put out on the street through all of their programs, about $28 billion. And very few people thought that they did it particularly well. So pandemic hits, Congress says, I've got an idea for you now, SBA. Here is $750 billion. Okay, bye. Good luck. And so we found that they were able to bring together banks, fintechs, CDFIs, community development institutions, and actually reach a huge portion of America's small business. They quasi-nationalized America's small businesses for a very short period of time in about a couple of months. Were there problems? Yes, absolutely. There were issues, there were challenges, there were concerns. But at the end of the day, the achievement is breathtaking for such a tiny agency to take that many dollars and in a reasonably orderly fashion, distribute them to the entire national small business economy.
Thanks, Scott. You're right. It is worth it to take a step back and just appreciate the sheer scale of how much money went out and how it was processed. Shafika, to come right back to you, you kind of already anticipated this question. You started to talk about, how you saw PPP, but what are you hoping that policymakers take away from that now as we transition out of PPP? We're just a few days away from the official expiration of it. The money's already kind of dwindling. What are you hoping policymakers take away from this?
Yeah, I think that some themes that we can take from this is that we need to build in inclusion from the start. The foundation for our work at the Policy Center has been to think about what creates for a more inclusive economy. And what we saw throughout the implementation of all of the relief programs, especially PPP, was that adjustments were made to make sure that these programs were more inclusive. So we saw expanded eligibility for those receiving the relief as well as for lenders who could participate. And early on as a firm, we had advocated for community financial institutions to be able to participate in these programs so that we could get to more vulnerable small businesses. Another example would be the 2-week window that the current administration opened up to businesses with fewer than 20 employees to apply for PPP. So with a large majority of US businesses being micro businesses, I think that really highlights where need was. And actually, it was the JP Morgan Institute that had a fact that Black-owned businesses had revenues and profit margins less than half those of white-owned businesses, and about 2/3 level of cash liquidity. And so I think we saw those racial gaps as well in accessing capital, which has persisted over time. And then the second theme I would take away from this would be partnership. There needs to be good coordination and communication between financial institutions and the public sector. And I think that will really get us to be able to deploy this capital quite quickly in the future.
Thanks, Shafika. Janice, what about you? What are you hoping that policymakers take away from PPP and EIDL experience?
So I always say out of something bad comes something good. And so I love the public-private partnership. I thought the PPP was a miracle. I thought personally it worked great, having been through the SBA disaster loan process. That got money into your bank account this time much faster. But I think the thing that I want policymakers to take away is that the pandemic showed you the struggles and the revenue losses after a disaster. It's not just the pandemic. It's when you have a hurricane, a fire, the areas are decimated. The small businesses lose their customers because they have to move away and their patterns change. And it takes years to recoup 35% revenue loss. And so my friends that are getting the Restaurant Revitalization Fund money, they're actually probably going to be made whole. They're such a small subset of all the small businesses. So there's going to be a whole group that are really going to continue to struggle. And then if they get hit with another disaster, we're under a flood watch here in Houston right now, it's just going to be compounded. So I hope that they look at it for every disaster. And I think that's a good thing that's come from all of this.
Thanks, Janice. Doug, lessons or takeaways you hope policymakers focus on?
Yeah, first of all, I've been doing commercial lending, small business lending for over 25 years in my career. And I would say that this has probably been the most amazing experience that I've ever seen undertaken in this space. And you just can't praise enough the personnel at the SBA for what they did. These, career staffers who worked 24/7, throughout this time period. They're truly heroes throughout this pandemic, just like our frontline workers. In fact, I would call them, frontline workers as well. So I just want to get that out. I know Congressman Hill said that, and Scott was mentioning that as well in his comments, but truly amazing. But I think some of the, things that I took away from this, and PayPal, we partner with WebBank, and we issue loans through WebBank for short-term working capital. And so we've never been involved in SBA lending, but when the pandemic hit, we felt, given our platform, given our size, given our customer base, we wanted to do everything we could to help. So we stood up within a couple of week time period the capability to help WebBank facilitate these SBA loans, and it was truly an incredible process. But what we found out of this, there's just a significant opportunity to reduce some of the paperwork, improve API architecture, streamline functionality. Some of the technology platform, the stack that the SBA uses, I think, can certainly be modernized. So I think there's a tremendous opportunity here to go in and restructure how the SBA is running their businesses to make things more efficient, to let people like Janice become way more efficient in gaining access to capital, to reduce the burden, reduce the overhead that it takes to qualify for these loans, but obviously still in a very responsible way. We still have to be incredibly responsible as lenders to ensure that we're doing the right things, and certainly fair access across all the demographics of the small business community, all the way from the largest of businesses down to the smallest. Our average PPP loan size was $26,000 during this process. So we really focused on that mom and pop type entrepreneur that needed it. And sometimes those businesses are the ones that need the help the most. But updating and improving infrastructure, technology platforms, I think there's a significant opportunity here for the SBA to do that.
Doug, that's critical. That we have got to modernize, the SBA systems. If you look at I think that I had no idea when we were entering into this, and our members, some of the largest fintechs engaged in the PPP lending, we're learning about how to enter the system, the E-Tran system. And of course, my assumption was, well, if you load it up into a system and there's algorithms and it's automated and you get an answer at the end of it. No. At the end of the E-Tran rainbow was a human who was reviewing the application. If we go through another event such as what we just experienced through this COVID pandemic, we don't have time for that, and borrowers are not going to be waiting for these systems to do a manual process any longer. And I think our digital lending future is here today. I think that you're not going to be able to experience lending the same way that you used to with traditional financial institutions or with government in any way. It's going to have to be faster, and it's going to have to be more efficient.
Well, just to make that point real, and Dane, we'll turn it back to you. But we as a technology company, we're used to automating. We're used to doing things without a significant amount of human intervention. But with the PPP, we just weren't able to get there and do the automation that we would have normally done through our traditional lending that we help facilitate through WebBank. And we had to hire hundreds of people. We had to move hundreds of people within our organization to actually do manual calculations to ensure that we were getting loan values the right way because of some of the challenges that Scott is mentioning in terms of just the pass through of data. So definitely there's a significant opportunity to improve the flow of data that's going to really help our entrepreneurs in the future.
Well, thanks, Doug, and thanks, Scott. Janice or Shafika, before we move on to other topics, I want to give you each a chance if there's anything you want to comment on what you just heard.
I'll just say that PayPal, I thought that they did a great job. A lot of my friends who couldn't get the PPP loans from a traditional bank, or maybe they were not associated with a bank, they went through PayPal, and I thought that was fabulous.
Thank you.
And I'll just add that I think we all agree that there needs to be efforts put into modernizing the SBA and really making sure that we're able to have the quickest process in getting capital to small businesses.
Yeah.
So that is absolutely a topic I want to get into. Modernization. I know we have some audience questions about that. I want to remind our audience that you can submit questions either in the chat function on YouTube or the chat function on Facebook, or you can tweet a question at us using the hashtag BPC Live. Before we dig into modernization of SBA programs, whether it's 7A or whatever else, Janice, I want to ask you, specifically from where you sit, both, as you said, as a small business owner, but also co-chairing the National Leadership Council for the 10,000 Small Businesses Voices program. We're here today to talk about reform, to talk about changes, to talk about that modernization. Where do you see as the biggest opportunities for that change? Some people have called for modernization of 7A. We'll talk about that. Other people say that government should create a new lending product altogether, long-term, low-interest loans. Where do you and others see the biggest opportunities for change?
So I think what we're going to see happen is the small businesses have had some issues maybe paying their bills, their credit, that we're all about our personal credit score. That's who I am. I'm my personal credit score and my tax returns. And so if I didn't pay my bills, then my credit score is going to go down. Also, as I mentioned, the pass-through on the tax returns. So your debt coverage service ratio, something, I think that's the name of it, that doesn't fit the blank that you're supposed to fill in. So then you get denied for that. So I think they need to loosen up on the qualifications. I would also love to see, maybe for a couple of years, 100% SBA loan guarantee. And then if you have some alphabet soup certification, they extend that another 2 years. And by year 5, everything's back to normal. Because as I said, it's going to take a while for businesses to recover. And then one thing, just from a paperwork standpoint, that is going to be a problem and is looming, between 2015 and 19, there were just about 8,000 SBA disaster loans or EIDL loans. In 2020, there were over 3 million loans. The SBA has the first lien on every single one of those loans. And when you go to the bank for growth, what you want to do if you have one of those loans, because you don't want to be 86 when you pay it off, then the bank wants the first lien on that next loan. And so the SBA has to subordinate. And so the client, which would be me in that case, has to call the SBA to get that done. I called yesterday just to try to get ahead, and I was number 96 in line at the call center. And luckily I had a direct number to someone. And I do want to say the people at the SBA are wonderful, and they really want all of us to succeed. They are so compassionate. But it's just going to be, I think that's really going to hinder growth, because also the small business can lose the opportunity with that kind of a delay as well. And then the other thing is, if the banks can't loan the money, then I do look at the SBA for maybe a two-phased approach. You give us the SBA disaster loan, get us where we need to just kind of recover. And then a couple of years later, we can go back and try to get one for growth.
Thanks, Janice. I know we have folks from the SBA tuning into this, so I know they appreciate Doug, Janice, and Congressman Hill's kindly comments about the SBA and their hardworking frontline employees. So thank you for that. So there's two big topics that you've all raised already. One is SBA modernization, but that obviously has a lot under it. The other is going forward, how do we build in broader inclusion into public programs, into publicly supported private programs, and into the private sector capital deployment channels for small businesses and entrepreneurs. So I want to make sure we dig into both of those. Let's take SBA modernization first, since everyone has covered it already. We heard Congressman Hill talk about it. Scott and Doug, one of the ideas that is thrown around now because of the experience during the pandemic, Doug, you talked about PayPal being included and other online lenders being included in SBA lending programs for the very first time. This is a milestone, but it was just it was just for the pandemic. That's now it was temporary. There are a lot of calls for this to be made permanent for organizations like PayPal, members of Scott's Association, to be included in 7A. For our listeners, for our viewers, take us through what does that look like? What does that mean when we talk about 7A inclusion of online lenders? What does that mean? Help give us kind of a baseline here for what that change would entail.
Sure, happy to go first. Well, I think there are a couple of things that we would recommend immediately. And the first is the lifting of the moratorium on new licenses to be able to become a government guaranteed lender through the SBA. The moratorium has been in place. It's a regulatory moratorium from the SBA since 1982. We're working with Congress to see if we can have that moratorium lifted, but SBA could simply do it on its own anytime that they wanted to do so. Fintechs play a pretty important role in reaching those groups that have been left behind. If you look at the recent data that's coming out of NYU Stern, they took a look at the PPP program data and found that Black and Hispanic-owned businesses were served much better in a more inclusive fashion by fintechs than by traditional institutions. We were reaching companies that were teeny tiny little small businesses that were left behind, while banks were primarily serving their own customers. And I think that's not a bad thing. It's just that we fit into the ecosystem reaching those groups that have been traditionally left behind. The other thing that I would recommend that the government take action on immediately is to actually have the API for real-time verification of income through the IRS. That system has been authorized by Congress for the last couple of years. All IRS has to do is build the API so we can have real-time income verification. From some of our internal data with our member companies, we think that as much as 85% of the fraud within the PPP program could have been eliminated if that system was operational at the beginning of this program. So two places to start.
Doug?
Yeah, I think, Scott, those are some good points. And similar to the stats that you threw out in terms of the Black and Hispanic communities, our data skews in the favor of those communities over traditional banking. I think just to maybe throw out a stat too of what's happening is if you look at our traditional product, which is PayPal Working Capital, which is a short-term working capital line that businesses, merchants that are processing through PayPal, we're able to look at that data and make credit decisions based on just that data. So, Janice's point, her business is her personal credit score. Well, actually on that product, we don't use personal credit scores in order to, determine how to make a credit decision. So I think the broader point there is we have proven now, we've been doing this for 7 years, that you can be successful, you can be responsible and prudent in how you're lending by leveraging other data sources. Now, you've got to do that in an incredibly responsible way. You have to ensure your models are going through all of the appropriate screens. You have to ensure that there's not any type of unintentional discrimination taking place. You have to look at it through a fair lending lens. And as we work through FDIC insured bank, who is regulated by prudential regulator. Obviously we ensure that all of that happens with the lending that happens that's facilitated through PayPal. But that's another, I think a significant opportunity is think through various data sources that can be used. And the other thing I'll touch on, Dane, that I would like to go back to is a theme that I keep hearing from Janice as a small business owner. And it's that it's going to take years for some of these businesses to come out of the pandemic. And if you think about the Paycheck Protection Program, what it did was it really was focusing on paying primarily the salaries of employees that worked at these small businesses. But for companies that got damaged during the pandemic, whose revenues fell, and if they had existing debt that they were trying to service, all of that revenue, or a majority of revenue, disappeared during that time period. Maybe they did a paycheck protection program. Hopefully it's going to be 100% forgiven, which is the way it was structured. But they still have to build up their revenue over time to service that debt. Plus they need additional capital to get out of this. And so it's a real dilemma, I think, as the SBA is sitting back and thinking about, how could we structure other programs to really help businesses. I think one thing, and Janice mentioned the debt service coverage ratio, maybe recasting debt, extending debt over a longer time period. Entrepreneurs and business owners are going to repay their debt. By and large, if they've borrowed money, they're about repaying it, but we've got to help them. And if it requires us to recast over longer time periods to lower that minimum monthly payment, to allow the debt service to be there, and maybe some incremental capital on top of that, which is a more risky proposition for all lenders to consider. But risk is going to need to be taken to continue to push capital into this such important segment to our economy.
Janice?
I actually know, I read about someone in the paper. So they took the pandemic idle loan, and you're not supposed to do this, but I think it's okay. He took that loan to pay off his Harvey loan. And so it's a very vicious cycle. And one other thing I just would like to throw in is those prior to 2020 that have 504 and 7A loans got 9 months of debt forgiveness, principal and interest paid by the SBA. But those with SBA 7B disaster loans did not get the same thing. They got deferment that accrues interest. And so there is an act, Lizzie Fletcher and Michael McCall proposed the Lift Up Act to remedy this situation. And I do hope that if there's any lawmakers listening, I hope that y'all will vote to take care of that inequity. Had to throw that in.
Thanks, Janice. We do have an audience question on this part of this topic, but Shafika, I want to give you a chance if there's anything you want to comment on here on this broader question of SBA modernization or any of the specifics we've been talking about.
Yeah, so as I said, I think that SBA modernization is an extremely important thing. And I also think in terms of fintech participation that there are learnings we can take from the PPP program. So according to the SBA's data, about 1% of the number of lenders that participated in PPP were fintechs, but they managed to account for 7.8% of the net dollar volume of the loans, which I think is significant and really shows us what can happen if we're more inclusive in terms of capital growth. And so I think that just making sure that we have the right policies in place to really make sure that we're giving small business owners options in terms of where to go.
So on this specific question of fintech participation going forward in SBA lending programs, one of the audience questions, I'm going to paraphrase here because this does echo some of the things that I've heard from others. So it's one thing to make changes that would expand participation. Scott, as you said, lift the moratorium on licenses, make other changes. it's another thing to actually make changes that would get fintechs and online lenders to actually want to participate. There's a regulatory question, there's a burden question. So what would need to be true, to answer that side of it, to make it so that fintechs and online lenders and others too actually want to participate in these lending programs?
I think modernization is critical, but I think that the access alone is really all our companies need. I don't think that there's anything further. We expect that the SBA can regulate fintechs that come in the door, as they have been doing with their current guaranteed lenders. And if they cannot do that, then we think there are plenty of state governments that can do that and can be authorized to run the 7A programs on behalf of the SBA. Now, the SBA did an incredible job again in PPP, but they have half the employees that they had in the 1980s. So it's a very small agency, and they would be certainly massively advantaged if they could leverage technology and our digital future. So I'll stop there.
I do want to press you, Scott, on the regulatory question, but Doug, if you had something, you look like you were nodding, like you wanted to jump in.
Yeah, look, I think I agree with what Scott is saying, and I think it's a modernization of the type of products or lending programs that are being offered as well. And is there going to be a demand and a need for it? The reason we decided to do this in the pandemic was for a very specific purpose. Businesses needed the help. And I'm proud to be part of the overall general banking community. We're PayPal's not a bank. We're a payments technology company, but we partner with so many banks across the country. And if JP Morgan Chase can deliver SBA lending to as many businesses as they need it, that's great. That's great for the overall merchant community. It's great for the American economy. But what we see is that unfortunately, you go back to the financial crisis and look at the number of banks that started before the financial crisis and ended now. It's down dramatically. So supply has decreased. Businesses have less places to turn, which is a need that we see. So we're constantly analyzing and studying and trying to determine, do our customers need us to step in and help with the SBA? We're not absolutely certain that is the case right now on the traditional programs, but we do firmly believe that there's a need for modernization, and whatever we can do to help the SBA, we're willing to jump in and help.
Scott, before we move off this topic, I do want to ask you to dig in more on the regulatory question. As far as I understand it, and I probably don't, but as far as I understand it, there's bipartisan support for this idea. Not just SBA modernization, but inclusion of fintechs, inclusion of online lenders. But there is this question of where regulatory responsibility will sit. You've talked about the SBA. I've heard others talk about the CFPB. I've heard resistance to that idea. Can you elaborate on this regulatory question and why you think SBA is best positioned, and maybe shed some light on this?
Sure. They have the capability to do it from an audit perspective, from an examination perspective, from a safety and soundness perspective. They certainly have the capacity to manage fintech lenders as they come into some government programs, if they were allowed to do so. So I think they're ready to do that from our perspective. And again, if they are not, they can designate some state governments as available to manage the 7A program for fintech lenders on their behalf. And that's something that I think that's an opening that they ought to be taking, particularly considering the equity that the fintechs are really offering. But I mean, you look at, this is a broader question, but a very important one. If you look at the community development institutions, the CDFIs, they are such a critical component of reaching really, really teeny tiny businesses, but they don't really have very big scale. They're very, very, very small. And so if the fintechs are reaching those teeny tiny little businesses, then we should be letting them into these government programs to actually make a difference. If you look at our member companies through the PPP program, our just about 6 of our members lent $16.5 billion to 476,000 small businesses. Those small businesses averaged less than 5 employees. The average PPP loan was less than 30,000. The median loan was less than 15,000. Very, very, very tiny businesses, and we have reach. We have scale. We have capacity to get in there and actually serve those that are most in need. So that's my recommendation. I think that Doug and I are on the same page. Is let us in. We can make a big difference.
Thanks, Scott. We've got about 15 minutes left. I want to remind our audience you can submit questions in the chat function on either YouTube or Facebook, or using the hashtag PPC Live. We have another couple that I want to get to, but they pertain to kind of the second big topic that each of you has mentioned, which is this question of, how do we ensure broader inclusion going forward? We've talked about the positive impact that PPP and EIDL and the sheer volume that had, but we also know that because it was based on kind of the system that was in place, it did, kind of reveal and kind of carry forward some of the disparities that we knew existed in that traditional lending system before. Earlier today, BPC released a video where we asked some external experts what they thought should be done to expand access to capital for small businesses and entrepreneurs. And 3 of those contributors did highlight the necessity of figuring out ways to expand capital even further for our underserved and marginalized communities. Shafika, the Policy Center, the JP Morgan Chase Policy Center, put out a document within the last few months that kind of outlines several ideas, and they pertain specifically to this question of how do you enhance access to capital for businesses run by women and people of color. Can you take us through some of those ideas and why you think they offer some high impact opportunities here?
Yeah. So first off, for far too long, there's been significant gaps in access to capital for entrepreneurs of color. And just to provide a little bit of color here, if we zero in on women of color, our research has highlighted that nationwide, Black and Latinx owned businesses are more likely to be women owned than white owned businesses, that firms founded by women are smaller than those that are founded by men, even though they are just as likely to survive, which tells us that policies that help Black and Latinx business owners also help women and younger entrepreneurs, and that Black and Latinx owned businesses are just as likely as white owned businesses to grow organically, but they're underrepresented amongst businesses that grow using external financing. And so I think that suggests that Black and Latinx owned businesses have fewer opportunities to build and have that competitive advantage. And so in our agenda, we highlighted reforms from SBA reforms to COVID-19 relief, government contracting, and other recommendations that we thought policymakers should be considering. And with these demographic barriers in mind and a focus on the smallest businesses, and also what was in the video that we had a chance to see, is that increasing resources to the SBA's microloan program is something that we really need to do. And so that's a program where the SBA provides loans that are up to $50,000, and that really helps businesses to get growing and grow to scale. And then also a stable source of funding, federal funding for state and local governments. And that's what we're seeing with SSBCI. I think it's really important that we make the Community Advantage Program permanent at the SBA. And that is a program that is derived from the traditional 7A program, but offers loans up to $250,000. And then an issue that I don't think we've touched on as of yet, but really improving our government procurement programs and policies so that underserved businesses have the opportunity to really grow. So we can do that through limits on contract bundling or increasing. We currently have contracting goals written into statute, and we should make sure that we're meeting those goals that we have, and then also that we're thinking about where can we increase those goals. And so I think we just really need to, especially on the contracting piece, work with businesses to understand why they're not able to take advantage of certain programs, but then also figure out how we can streamline those processes. So I think that's a pretty good sum up of the agenda that we've put out.
Thanks, Shafiq. And I should note that the extension of the Community Advantage Program that you mentioned has had bipartisan support in both the House and the Senate, and bills introduced, I think, last Congress. Janice, we have a question here that I'd like to direct to you, but it's on this question of inclusion, but it also goes beyond access to capital. So I'm going to shorten this and paraphrase it. So we know that certain groups, whether it's recent immigrants, women of color, face barriers in gaining access to capital. We touched on that. I think that's been broadly acknowledged. But they also have to work harder to gain access to networks, mentors, industry knowledge, and other support structures. So the question is, how might we think about redesigning our programs, including our access to capital programs, that address these other disparities and challenges in tandem? So is there a way to coordinate when we're talking about inclusion of access to capital to also address these other non-financial supports as well?
I'm so glad you asked that, because this week, or it was last week, I was on a call with the SBA administrator and someone else from her office. And I didn't know this, but in the last bill that was passed, there was money put in there for small business navigators to help the small businesses find out about all these different resources. They need to, first of all, they need to make sure the SBA has money for marketing, because they have a great database now of small businesses to market to. And there's so much free knowledge out there. And I'm actually an example of what happens when you have access to that free knowledge, because I started with the Goldman Sachs 10,000 Small Business Program, but I've kept up with them and they're continuing ed. But in addition to that, I have an SBA SCORE mentor. I did the SBA Emerging Leaders. I have an SBA consultant at the SBDC. Free, and it's all free. Free is good, and it made me learn. I couldn't read a balance sheet or a P&L. I didn't know about that stuff. They say fake it till you make it. Well, I was pretending to be a business person, but now I feel like I actually understand a little bit. I can't read ExxonMobil's balance sheet, but I can read mine. So I think that is great. And then one thing, when we were talking about the CDFIs, one thing I did want to say about that, when you go to a CDFI, it tends to be because you can't get a loan in a traditional sense, and you're maybe a little more high risk. And so then that interest rate is higher. And I don't understand why it should be that way. Let the SBA subsidize it somehow, because these are the people that need their money more. Every penny counts even more if you're getting your loan from a CDFI. So I would like to see some reform around that, where the CDFI lends at the same rate as a regular bank.
Thanks, Janice. Scott and Doug, I want to give you both a chance to weigh in here about ways to expand inclusion in our financing system, but I also want to frame it in the context of innovation. You're both, your organizations are both in the business of innovating and finding new ways of deploying capital. On the video BPC put out today, we heard one contributor talk about alternative methods of credit assessment as one example of innovation. How are you both thinking about how to innovate in capital deployment and this question of broader inclusion and access to capital? Doug?
Yeah, I think I go back to the infrastructure, the platforms, the ability to streamline process to ingest data, to truly understand the health and the prospects of a small business that go beyond a traditional credit score. Might go beyond. You've got a lot of entrepreneurs with thin files or no files that are out there that on an unintentional basis they can't walk into a traditional bank branch and that reason. But there are within the fintech industry a lot of incredible innovation that's happened over the past several years when looking at credit risk, looking at different forms of data to make decisions. I think one of the most promising data technologies out there is open banking and the ability to ingest and understand inflows and outflows and creating that view of cash flow without necessarily looking back at your last 2 years tax returns or looking at a credit score, but truly seeing what's happening on a now basis, as well as understanding seasonal impacts that businesses go through, which is what the basis for what a lot of fintech lending takes place. Again, going back to PayPal working capital, we are ingesting the sales volume that we see coming in and out of the merchant sales that are using PayPal and able to make some decisions. 70% of our loans, for example, went to 10% of the counties that lost 10 or more bank branches since the 2008 financial crisis. And so, we are serving these small businesses that frankly just don't have the choice any longer because of what's happened, the consolidation that has been going on now since the financial crisis within the banking industry. So I would just, I would go back to continuous innovation, access to open banking data. The more information that we can get access to, I think it's going to help the entrepreneurs. And then just to finish my comments, I'm going to say, the local support that Janice was just mentioning, whether it's SBDCs or SCORE, that is so critical because you have to understand, when you're taking loans, what it's doing to your financial position to ensure that you can ensure that you can repay that. And that is a risk. It's a risk from a lender perspective. It's a risk from a borrower perspective. And you need to have that understanding and having access to all of these resources, creating that business plan and knowing exactly how I'm going to repay this debt is foundational for success.
Thanks, Doug. That's a great statistic about the counties losing the bank branches and concentration of the loans. Thank you for that.
Yeah.
Scott, before we do
Building
one
on that.
last go ahead, Scott, before we do one last quick fire round, this question of innovating for inclusion.
I think it's important to note, and this inclusion question is really important, and I think Doug really hit the nail on the head. But there are a couple of other points I wanted to bring up associated with it. One is that fintechs are and fintech lenders are subject to fair lending laws, and algorithms don't discriminate. And that's not me saying that. That's the FinReg Lab coming out and saying, well, surprise. The cash flow underwriting models that we're using, generally speaking, are inclusive, they are fair, and they're more effective at pricing risk than using FICO alone. So we're making an enormous difference. If we did some research a couple of years ago that found that our member companies were lending almost a third of their dollars went to low and moderate income zip codes, places where bank branches were disappearing. And their traditional forms of capital and credit were disappearing, and all they needed is an internet connection to get attached to us and to allow us to help them to make a difference. So it's happening already in terms of the inclusion, and we're making a huge difference as fintechs.
Thanks, Scott. So we've got only a couple of minutes left. I want to go around to each of you. There's been, we've heard about a lot of new and exciting developments on this event so far. We've heard about, the good things that the government did during the crisis. You've all talked about things that your organizations are looking at, or Janice, that you are experiencing. So I just want to get a quick, around the screen kind of thing. And we have an audience question about this, about other flexible financing mechanisms that we're seeing kind of on the margins. Whether it's employee ownership models or revenue-based investing or things like that, kind of, outside that mainstream. But I want to know, what are you most excited about? We've talked a lot about changes, about modernization, about reforms. What are you most excited about today when it comes to small business finance, small business access to capital, and what can public policy do to support that thing that you're most excited about? Shafika, I want to start with you.
So I would say the thing that we really learned through PPP is what we could do with our digital online resources. And so we saw that it really made a big impact. It made the process much more efficient and effective for the customer. And in terms of policy, I think that we can use policy as a tool to help us limit and control for the potential fraud and abuse of these services.
Thanks, Shafika. Scott?
I wanted to note, I think that product innovation is what I'm most excited about. I think that our member companies are constantly thinking about new and innovative ways to serve their customers and to offer them the kinds of products that they need to actually grow their businesses. And one of the things, the public policy questions that's the most serious right now is the threat to the bank partnership model. And Doug knows this very, very well. We have a Congressional Review Act campaign going underway right now to overturn the true lender regulation that was promulgated by the OCC. And that is a direct threat to access to capital for low and moderate income areas because of the threat to the bank partnership model. And I think that's something that we should be paying very close attention to. If you're a member of Congress, definitely we hope that you're not going to be hurting the bank partnership model, because it's working right now to provide significant inclusion.
Thanks, Scott. Doug?
I'll go back to the comments I was making about open banking and access to data. Whatever public policy can do to help the industry understand, the necessary, of course, with the consumer or small businesses permission. But gaining access to data can really unleash a lot of predictive and powerful information to make streamlined decisions.
Janice, I'll turn it over to you for the last word.
I'm just a little small business owner. But one thing I learned about this week I thought was very interesting is there's a group in Houston of women, and they want to open a women-owned bank to service women and minorities and the underserved, underbanked. And they're going to use a combination of probably something like what PayPal uses or the Fintech model. And then if it kicks up a no, then you go to a person and they talk to you and they try to understand what you want. And I think that kind of a combination in lending would be fabulous, actually. And I think we'd see a lot more growth for that type of a model.
Thanks, Janice. I want to thank all of you, Doug, Scott, Shafika, Janice, for taking the time. Thanks for your comments, your insight, your candor. Thanks everyone who watched this. The video will be live on our website, bipartisanpolicy.org, and we'll see you at our next virtual event. Thank you.